Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates, and 10-year note yields continue to nudge higher, although we haven't gotten to that 3% mark yet. It's been about since mid-June since we've seen a 3% trade, and even then it was a blink and you may have missed it. I think that right now the market is gearing up towards a lot of fundamental news that's coming up. Technically, the market's held this range. It held 280 to 290. Now if you widen that out, it's holding 280 to 3%, certainly well within the band of that 275 to 310 levels that we looked at if you go back to May. So right now the market is still holding a range trade. It's just expanding that range and nudging higher, kind of waiting for something to happen. I think it's pricing in a number of different things, whether it be more positive economic data, whether it be something in the refunding, whether it be something in the form of demand. And right now we're starting to see that just nudging higher. It'll be interesting to see what happens if we get to 3% or above it on a settlement basis. Can we make a run towards that 310 level? That is something that we haven't seen in a long time, and something that I think has questioned a lot of the shorts who've been holding on here. Yes, the shorts have been getting out modestly, but most are still holding on, and that could be they've been questioned as to how you can hold on when the markets seem to be doing a reversal and the yield curve continues to get flatter. They may be now getting paid if we hold on. And if you look at market volatility, as I mentioned, despite the fact that we have seen yields nudge higher, we still are within that range. We've just widened a little bit. So sellers continue to hit volatility with the idea that a big shock to the market isn't coming, at least isn't coming in the near term. And we continue to see market volatility decline as we hold inside of that range. And lastly, what do we have this week? We have a full slate of data. We've got central bank meetings from the Bank of Japan, the Bank of England, and the Fed. We've got a jobs number on Friday, which is expected to look good. And then lastly, we have this Treasury refunding announcement. And that, to me, seems very interesting because it's been the short end supply that's really been boosting the short end yields and has been flattening this yield curve. So it'll be interesting to see if they start to boost maybe some of that back end supply. Obviously, there's a lot of budget deficit to fill there and a lot of money being spent that it's going to need to come from somewhere. And right now, issuing bonds is the way to go. They've been doing it in the short end. Will they look to maybe goose the back end of the yield curve issuance to help get that yield curve from continuing to flatten? So right now, Treasury bonds nearing a critical level of 3%. Doesn't look like we're going to see any kind of reversal without a major surprise, but obviously we're holding that range as we head into the Fed, the BOJ, and the BOE this week. This is Todd Colvin coming to you from the floor of the CME Group.